Good morning, Predicted Trades family. Hope everybody's doing well. Going to do things a little bit different today in prep. Going to do a very quick review just to say yesterday we caught a nice pop up to some of our key levels and our beast levels. We hit the longs on the 386 calls on SPY. And when SPY was tapping 386 at the highs yesterday, we locked those up. We switched short to the 383 puts. They went 40 to 60 cents up to $4 and $5. The market, had that pop in the morning, rejected down back to the levels from Friday and from last week. So, as we look at where can we be going today, let me just load up our normal prep time frame, study set, everything. And while we're waiting for that to load up, we do have FOMC today, so let's take a quick look at our economic calendar. Today we do have some data coming out around 10 a.m., some manufacturing data, some jobs data. Then we have FOMC at 2 p.m. The rest of the week we do have unemployment, jobless data tomorrow, as well as some manufacturing PMI and a Fed speaker midday. Friday, some non-farm payroll, some more jobs data, and a whole bunch more Fed speakers on Friday. So plenty of econ data going on this week, plenty of volatility returning to the market. We saw that yesterday because as we were gapping up, VIX was also gapping up. And we saw that we got, that quick move up in the morning to run into the daily 21, the daily 15 moving averages. Then we sold back down below the daily 8. Now we're coming up right at the daily 8, trying to open above it. So again, we are trapped between our daily 8 MAs, daily 21, daily 50 above. And not surprising to see that we've arrived back at our daily MAs as they're stacked in this little range right before FOMC. Depending on what could be said today and what kind of rate hikes we get, it could propel us up to finish the journey getting above these moving averages and arriving back at the daily 50 up near that 39.22 key level. Or depending on what is said today, it could send us back down to the bottom of the range that we've kind of been stuck in. As you can see, we've just been wedging the last couple of weeks. And trying to, hold this 3,800 and make our way back above 3,900. So let's see today if FOMC is going to add any extra fuel to a directional move to push us above these moving averages, get through recent highs, or send us down through the lows that we have been holding to get down to the bottom of a daily and 2-day squeeze. We have our daily 2-day squeeze sitting down at near that 37.73, 37.41, but we have been holding up above 38.07. And going into today, we've got a few squeezes to help us out. We have a 30-minute and hourly squeeze kind of forming around, let's say yesterday's, after the first big drop, yesterday's mid-morning highs down to yesterday's lows. We have an hourly squeeze that is starting to form, basically that 38.70 down to a 38.25-ish. We also have a big 4-hour squeeze that is formed, top of which around 3,900, bottom at 38.07. So the thesis for today, going to use that hourly squeeze, which spans, we have a 30-minute squeeze as well. Yeah, 30-minute squeeze too. That 30-minute squeeze, which spans from that 38.70 down to 38.43, as long as on dips we can hold this 38.43, 38.55, looking to go long to get back up to this 38.78, to move from this daily 8 back up to the daily 15 and 21 where we rejected yesterday. And if we start to lose that 38.55, we're going to test this 38.43. Should we start to lose that, coming back down to test 38.30, 38.20, and this 38.07 at the bottom of this 4-hour squeeze. It is FOMC day, so it could be a little bit of slow action to start the day. And if we look at kind of what's low probability, right? A low probability today is that we just rip out the gate and we're back at 3,900 and consolidating for the into FOMC. Kind of medium probability is that we have a little dip down to 38.43, reject 38.55, and sell off straight to the lows going into FOMC. And I'd say kind of more higher probability, we hold up above 38.43, 38.55. We try to make a move up to 38.78, and then we're ultimately contained between 38.43, 38.78, and chopping around this daily 8 going into FOMC. And then once the data comes out, it should either propel us right up to these moving averages or right back down to last week's lows and this 3,800. That's kind of what I'm feeling like is more of a higher probability play today. And looking at our 45 EMAs across all intraday time frames, they're all stacked together between that 38.55 and 38.60. So we are chopping right around them now. You know, basically expecting us to maybe have a little dip, try to work above them, but basically stay in that range going into FOMC. So let's move on to NQ. On NQ, kind of the same thing. Expecting us to stay between this 10,950 and this 1170-ish. So I wouldn't be surprised for a little dip, maybe a little run up, and then staying in between that range going into FOMC. We're at the daily 8. We didn't make it to the daily 15 yesterday. NQ's been a little weaker to the upside, and the daily 15 sits up near that 11,200 at the top of that 4-hour squeeze. We have that 30-minute and 1-hour squeeze right between that 940 and 11,000, the daily 8 at 11,050. So use this small range of about 100 points as a gauge. If we just can't get through the daily 8 and this 11,070, we're likely going to come back to retest the bottom of that range, and if we can hold up, we'll try to fight back to that daily 8 before pressing higher. Yeah, our 4-hour squeeze bottom sits down near 1080, that daily squeeze right near that 750. So if we do have a negative reaction to FOMC today, likely shooting through this 850 to get down to 750 and 650. And if we can have a positive reaction, the daily 21 sits up at 250. And beyond that, the daily 50 way up at 11,450-ish. So those are the levels to watch for NQ. I'm just going to skip right and go to YM. Back above that 33,300. On any dips, basically looking to try to hold and bounce there at the worst 250, kind of the bottom of that 30-minute squeeze. And as you can see, we have the daily 8, daily 50, daily 15, daily 21 moving averages all stacked together between 350 to 450. So on any dips, let's see if we can hold above 300, this daily 8, and start to work our way back up above 450 to try to get to 500, kind of where we topped out yesterday. If we start to lose that 300 and that 250, then likely coming down near yesterday's lows back to this 33,000. Same holds true if we have a negative reaction today from FOMC. And right in the middle is this zone that I drew between 250 and about 325-ish. So as we are above that zone, let's see if it can be support to push us higher. If we start to slip into it and can't get back out of it, then it's going to be resistance to head back down right in the middle of pretty much a big wedge in consolidation. Oh, don't start freezing on me, Toss. There we go. All right, just going to cover some big key tickers today. Apple had a little bit of negative news yesterday right after open about updating their sales projection from a weaker demand for Q1. So, less favorable sales projections and obviously a big negative reaction. Apple was a big part of that drop yesterday. For any upside, we were looking for it to hold any of these three key levels, this 127.3, 128.5, 129, it just tore right through them in the first 30 minutes and then rejected. And I said the next stop's probably this zone below. So, didn't quite get there yesterday. We are back above 125. Let's see, and we closed pretty much right at 25. Let's see on any dips if we can hold 125 and start to push back up to our key levels above that I have marked. I suggest you mark them as well on Apple. And if we start to lose 125, we might just complete that journey down to my next key zone below, right around 123.5. Yeah. That is the thesis for Apple. If we can get above that 127.3 and hold it on any pullbacks, we could chop around here going into FOMC, and then if we get a good reaction, shoot right back up to engulf what we dropped yesterday. But with that negative news, let's see if there really is any interest to push Apple back up, or if they send it right back down to where it settled all afternoon. AMD sold back with the market yesterday, but overall trying to hold up this slight uptrend that's forming. And arriving back pretty much at what we sold off from yesterday. So a little rotation into chips this morning. On any pullbacks, let's see if we can stay above this daily 8 at about 64.5, 65 psych level. And looking for it to push up through 65.5 to the top of this 2-hour squeeze, sitting at 66 with the daily 15. And if we can push further, daily 21, 66.5, daily 50, 67.5. But if we start to lose at 64.5, likely coming back to this 63.5 low that we've been holding. And if that can't hold, then down to this support zone that we drew last week at 62.5. Amazon, actually a decent recovery bounce end of day. So you want to take note what makes a good move end of day and kind of recovers, Amazon being one of them, Apple not so much, just to see what they are rotating to on the upside on any bounces. So Amazon, nice little uptrend forming. On any pullbacks, let's see if we can hold that pre-market low wick around 85.5. 85.5, 86 kind of your zone of support to try to support any upside thesis this morning going into FOMC. We do have the daily 21 sitting at 87.5. If we can get going to the upside. And then first Keltner's up near 90.5. If we do have favorable reactions today and they actually do start to rotate into Amazon a little harder, obviously have these recent highs to take out. If we start to lose at 85.5, 86, then likely coming back to retest the daily 8 and yesterday's lows around 84. And if we have a negative reaction and everything tanks today, you want to be targeting these recent lows 82.5, 82, 81.3. Moving on to Google. Again, another name that had a decent recovery yesterday. XLC saw some rotation end of day. Back above this 89, 89.5. So that's your zone of support. Looking for that to hold this morning and to lead to any upside going into FOMC. The daily 21 sitting just above, near yesterday's highs, around 91. And if we can get going through the top of this squeeze up to 91.5, 92. But with FOMC, we might just make a push up, start to slide back, and kind of hold in the middle right at our key levels. Should we start to lose this zone, back down to the daily 8 and yesterday's lows at the bottom of this squeeze, and should market sell off back to 87, 86.5, where we were basing. Meta was surprisingly strong yesterday. Pushed up while the market sold off, flagged, and then pushed for more while the market recovered. Wow, now pushing up to 127 at the top of a daily squeeze, a 2-day squeeze, sorry. Next stops, if it just keeps continuing, up to 130, and the next daily Keltner, which sits at about 131.5. If we do come back looking for 123 to try to hold, but if market sells off and we have negative reaction today and lose 123, then it's back to 120 where the daily 8 sits, 117.5 where the daily 21 sits, in the middle of this daily 2-day squeeze. Microsoft also did a decent job holding up yesterday, not quite as strong as, say, Meta. Looked like it was going to get going and got above its daily moving averages, then slipped back below them. Ooh, quite a negative downturn on Microsoft. I'm guessing we have some news or a downgrade. But arriving back at this key 232. 232.86 key level. So let's see if that can hold. If we see any upside, let's see if Microsoft tries to recover this big gap down. And if it just keeps going down to 230 at the bottom of this 2-day squeeze, which spans down to our next key level at 225.5. Little surprised at this. I'll go look to see if we have any news or something after this. Netflix, steady uptrend and held it yesterday to recover at all these key moving averages and building up steam to try to get back above 300. Let's see if we can clear 300 and get up to 307. Have to clear recent highs. If we start to fall back and lose 295, then we should expect a return back to the daily 8, daily 50 at 292.5. Yesterday's lows near 290. Should those start to give out, back to 285, 282.5. NVIDIA. Didn't make as good of a recovery as, say, AMD, but overall back above 145. So let's see if we can hold above 144. Yeah, 144. Try to make our way back up to 148, 150. The daily 8 sitting up there. If we get going past that, have a positive reaction at FOMC today and everything is ripping. Want to be targeting 154, 155 where the daily 50, daily 21 sit above. But if we reject 148, the top of this squeeze, the daily 8, and start to lose 147.3, then we're coming back to 144, and maybe yesterday's lows around 140, last week's lows around 138.5. QQQ. Oh, it's done a good job repeatedly holding this zone. Yesterday's sell-off got right back to it and then pushed off of it. We closed around 264.5, 265, some of our pre-market lows. So let's see if we can hold above that 264.5, 265, and try to make our way back up to 268, 270 at the top of this 4-hour squeeze. If we can push past that 272.5 where the daily 21 sits. But if we start to lose that 264.5, likely coming back to retest this zone around 263-ish. And should that give out back down to 260 in last week's lows. So SPX yesterday, I talked about how we were opening above a gap and near, we were basically set to open near 2 gaps. We opened above them, quickly hit our moving averages, and then tore through them, back down to the lower gap and bounced, providing a good roadmap yesterday on SPX. Let's see, we're dealing with a little 20-point gap up. SPX closed around 24, so we're going to be opening around 38.50, 38.45-ish, so we'll be back above this daily 8 and in the middle of this gap that we did fill yesterday. So I'm going to go ahead and remove the gap since it's now been filled. Ultimately, let's see if we can hold above that daily 8. At the worst, this little high that we got in the morning before selling off further. So 38.35, 38.40-ish. Let's see if we can hold that support and try to push back up to the daily 15, daily 21 above near 38.75. If we can push further, that daily 50 up near 3900. But if we start to lose that daily 8, then we're likely coming back to fill the gap to 38.25-ish. And if we give that out, 38.15, 3800, and then filling this gap back to 37.80-ish. SPY. So, yet again, this zone that we drew last week in prep around 378 provided the support we needed to bounce yesterday, even retested it and bounced again. And we're opening back above 381.5, actually going to be opening near 383. So on any dips, looking to hold 381.5, looking to push above 383 and try to recover back to 385 at 386 where we topped out yesterday, back at the top of this 4-hour squeeze in the daily 21. If we can push any further past that, 388.5, 389 where the daily 50 sits would be the upside target outside of this 4-hour squeeze. But if we start to lose at 381.5, 381 is the target, kind of that overnight little low. Then back to 380.8 fills the gap, 380. And if we just keep cascading down, 378. Should that start to give out, we're talking 375, 374 are the next big key levels should we fire down outside of this 4-hour squeeze to the downside. So we're in the middle of a 4-hour squeeze going into FOMC on SPY. Let's see what we get if we slowly try to grind up, maybe have a pop and then come back and kind of sit in the middle of this squeeze going into FOMC. And should we get a positive or negative reaction, we might get outside of this 4-hour squeeze, top and bottom. And now we have our targets to the upside should we get outside of this 4-hour squeeze, targets to the downside should we slip down. We'll do Tesla and VIX and then wrap it up. Tesla. So yesterday, the whole market was gapping up. Tesla gapped down. I said, not looking good. They're probably going to keep beating it up and probably going to revisit that 112.5, 110, and maybe down to that 105 where it bounced last week. We got that drop, bounced there. So let's see if we can hold that 105. If not, we're coming down to 195 if there's further selling going on Tesla. If we can hold that 105 and get over 102.5, then looking to recover back to 120, 125, where we were topping out to get back to that 126.37 key level. But clearly in a range, play that range until it breaks lower or back up to daily moving averages. VIX. So, market gapped up yesterday, VIX gapped up yesterday, so it's always a sign we need to be mindful of. Basically, volatility was increasing, and probably going to be a volatile week. Would not be surprised to see us stay up here between 122.5 and 123.5 until we get this FOMC data, jobless claims, non-farm payroll out of the way. But if we are going to see a decent little upside grind into FOMC, kind of expecting VIX to slip back down to 22.5 and down to 22, back to these daily moving averages, daily 8 and 21, and the 15 just flanking 22. So for any upside into FOMC today, VIX should start a little slow grind back down to these moving averages and back down to fill this gap. But if we are going to just reject on the market and slip right back down, then we'll likely see VIX stay above this gap and yesterday's lows, make its way back up to 23.3 and 23.5 near yesterday's highs. And should we start to sell off or get a negative reaction from FOMC, then it'll shoot up to 24.5 at the top of this daily squeeze, maybe even 25. So that's it for Prep today. Thanks everybody for tuning in. And if you're new to Predicted Trades, definitely come check us out. You can join our Discord for free, where you can start to learn about our our system and our tools. We output a tool every day. I can see Carl Jones asking about that. Yeah, tools will be dropped right after I get off prep. But so hopefully, if you're new to Predicted Trades, definitely come check us out. You can join our Discord for free. This whole week, you can test out our tools and get used to our system. We have a sale going on where you can save some money on subscription, kind of a New Year's sale. So definitely come check us out. Thanks for tuning in. Good luck today, and we will be on the mic all day in the room for you to listen in to our call-outs. Good luck today, folks. We'll see you in the chat.